your obligation is to serve your residents. And how do you provide an affordable, accommodating home that they're proud to be in, that it suits their needs, their lifestyle, and you got to solve that problem.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. So I was in the middle of talking with Brian and Cody, and I went, I have to turn the recorder on, because I was just about to talk about, like, Cody was queuing up, like, what's the story he's going to tell us? And he went through this and this and this and that. And I went, that's perfect. That's exactly the truth about what happens in real estate. And I've been investing, as you guys know, for 35 years, and it's a long time. I am now over 50, despite the blue in my hair and the fact that I still have a daughter who is 12. I am turning into an older lady, graceful, elegant. I will hold on to those, but still an older lady. And the fact is, I don't really want to do this stuff anymore. I want to let you young guys get to it. You guys do it, because I don't have the energy for it. I want to be a passive investor. I want to be able to send you guys money and say, you deal with it. And then send me a check. I'll take lower returns, but I will also work a lot less harder. So, I'm going to turn this story on its head for a minute. I'm going to read the one pager that you guys sent me, but we're going to just put this on its head, and we're going to start with the story. Can I do that? You guys let me do that?
Absolutely. Sure.
Totally. Okay. So Blue Oak Capital is a Houston-based private equity firm. Hold on, guys. Hold on. Let me back up. That way you guys on YouTube and Roku can see their bio. Blue Oak Capital is a Houston-based private equity firm focused on the acquisition of cash flow producing multifamily real estate across the U.S. Blue Oak Capital is dedicated to business excellence by creating a culture founded on trust, transparency, integrity, respect, and commitment. Now, any of us who've been invested in real estate for even like 5 or 6 years can really appreciate why those particular elements are so important. I could go through each one of those and why, to me as an investor, I care about those, transparency being one of the highest things on my list, followed by integrity. Hopefully you respect me as well. But honestly, integrity is the thing I'm counting on when I'm a passive investor and I'm investing in what you guys are doing. Your integrity and your due diligence is what I'm really relying on, and then your capacity to move that forward. Our mission is to strengthen our relationships and partnerships with those around us, help others obtain financial freedom through commercial real estate investing, and improve the lives and communities in which we serve by providing safe, affordable, and accommodating housing. Guys, welcome to the show.
For having us on, Christina.
Yes, thank you so much. It's an honor to be here. And listen, before we get into further show, we would be more than glad to accept your investment capital anytime you're ready. Just let us know.
Yes, that is the perfect response. That is exactly what I need you guys to say, and exactly what I expect to hear. Let's jump into the story first. Real estate is fun, challenging, exciting, busy, rewarding, all kinds of things. But challenging is one of those things it is. And I've invested in real estate long enough, and invested. I'm an investor. I invest in stocks. I've invested in oil. I've not invested in gold directly, but my father-in-law has. I've invested in hard money loans. I've done angel investing, startup investing with businesses. I've invested ATMs. Oh, and by the way, multi-units and single family and mobile home parks and a variety of other real estate backed assets. So I'm an investor. I have lost twice in my life close to or over $1 million. Twice. So that being said, I appreciate a good story in real estate and what it takes, because I've been the person sitting in the chair going, I am a first A loser. I have completely messed this up. I have no idea what I'm doing. I thought I was on top of the world, and now I'm not. But I stuck with it. And I moved myself forward. One was in stocks, one was in real estate specifically, but I stuck with it and I moved myself forward. That takes a level of depth and commitment. So let's hear your story. Why use real estate to break through to your success when it really can challenge you as a human being?
Well, I mean, it's like anything else, right? I mean, anything in life that is worth fighting for is going to be challenging, right? I mean, if it were so simple, everybody would be doing it, right? And so that kind of goes without saying. I mean, yes, real estate is an incredible vertical. It is an incredible vehicle, and there are so many positive aspects to what we do in our business. But we all know what you're alluding to, right? Is it does come with certain headaches and certain challenges and certain risk. I mean, it is not a risk-free asset by any means. And so, yeah, we've all got stories to share. And Brian, I'm sure she's referring to the one we were talking about before the show, right? Which was the 5-figure lift station that went out, the 2 positions on our staff that are vacant, and our highest least exposure on our acquisition that we recently just took over. So why don't we start there?
Yeah, I am drooling. I am so excited about this story. I'm just like, because this is what it takes for a professional to show up. I mean, what we see in this story is what can happen, but the result of the story is what you made of it. And the fact is you made something of it. So
absolutely. And that's why, as investors, there's a saying in real estate that our job is to be problem solvers, right? So finding opportunities like this that have problems to be solved, this is what we're looking for. This is where we, hear the term value add. These are the opportunities where we can add value, right? So as Cody was alluding to, there's always some skeletons in the closet. Some have a lot of skeletons, some have a few. And the longer you home the property, the more skeletons you usually find. And they come across all verticals. Your C-class properties, which are usually more workforce housing, more blue collar tenants, are going to have a different type of skeletons often. But even your A-class properties can often have some skeletons, which is the story we're talking about, where one of our most recent acquisition, which was a 2017, 2018 vintage property. So a newer building, A-class property. As soon as we took over, the skeletons started coming out of the closet, so to speak.
yeah,
We found out that one of our lift stations was previously having some problems, which is basically something that they have on the property that's a pump that has to do with the sewage and the drainage. That went out, I believe, the first week that we owned it. Ended up finding out that that's something that needed to be replaced, which was a 5-figure expenditure. So that's something that surprised us. But that's why when Cody underwrites as our lead of acquisitions, he has a solid CapEx budget, and also making sure we have reserves in place for these types of things. Following that as well, we thought we were going to go and acquire the property and be able to keep the on-site staff, which was a leasing and maintenance agent. And that didn't happen as well. We ended up finding out that he wasn't able to stay. But we also ended up finding out that he wasn't the best person to execute our business plan. So it had a little bit of a silver lining as well. So these types of things, you start to find as you take over the property that, what you think you were going to do when you took over the property isn't actually what ends up happening. But that's what makes us real estate investors, right? We're problem solvers. Our job is to always say plan and pencil. Make sure you have a plan. You don't want to go in there swinging blindly, but your plan needs to be in pencil, because a lot of things are moving. A lot of things are going to change. And our job is to be problem solvers. And as these things pop up, make sure we have the skill set and the ability and have the right resources in place, both financially and through our network. Who do we call to solve this type of problem, to go and just make sure we continue to move forward so we can execute our business plan?
Beautifully said. Beautifully said. Because it is exactly what happens. And it really is in the underwriting. I tell this story a lot. I was involved in Arlington, Texas as a partner in a deal, and the GP was an LA guy. I knew him well. We were friends. This was going to go well. This should be fine. But I was thinking I was a limited partner, just so you know. I was the investor. I was not the GP. And so I was not on that side of it. And we had, I think it's almost $200,000 worth of subflooring dry rot damage in Texas due to the oil that you guys have in your, yes, they're not in there. I remember this was literally a decade and a half ago, but there you go. And so all of my investment went south because our reserves were not big enough. And we did not, the GP, who was an LA based gentleman who had worked in multi-units, but primarily as an agent. Like, there's my red flag. That's red flag 1. 2 was working out of state in an area he did not know. Red flag 2. 3, he offered 35% total return across the 3 to 5 years of the project. 5 years divided by by 30, divide 35 by 5 years. Right? The return actually wasn't that big. We didn't really have that big a cushion, and the CapEx budget was not nearly big enough. That one failed. Your guys didn't. So tell us how you made sure it didn't.
I think it all starts with, like you said, it's the underwriting, like for example, the lift station. We want to make sure when we're underwriting that we have healthy amount of reserves and a contingency for those reserves just in case something happens.
Mm-hmm.
COVID was a great example about how things can come out of nowhere and you can't necessarily plan for them. So making sure we have those reserves, making sure we have that budget in place for those surprises was something that helped us weather that storm. We didn't have to hesitate and think about, oh, should we fix that? Should we wait? We can make the move quickly. Same thing with the staffing. Our job is to have strategic alignments with our property manager and to stay on top of our third-party property manager to make sure we're having, if not daily, at least multiple times a week, conversations about staffing and getting on multiple calls to figure out what's our best strategy based on what's going on in today's market. There are massive labor shortages, wages are rising very fast. It's really hard to find skilled labor. What can we do in the interim to make sure that the property is performing at its highest and best use and it's performing and keeping the residents happy? And then what's the plan 3 months from now, 6 months from now, 12 months from now, so we can set ourselves up for success? So on this 5-year business plan, we have everything that we need to make sure that it happens, and we have a plan going forward. So I think CapEx, making sure you're underwriting correctly, making sure you're communicating with your property manager. I didn't mention on the last segment about the lease exposure Cody had mentioned. We have a lot of tenants coming off leases at a prime time leasing season, which the previous owner did not do a good job of setting us up for success when 20% of your residents have their lease expiring on the same month.
Okay.
So those little things, constant communication, constantly talking to your property manager and making sure you're being aggressive and pushing forward. These are the intangibles that you want to make sure your general partner has if you're coming in as a passive investor, that they have a strategy, they have a plan, and they're going to execute their business plan.
Yeah, I mean, look,
Go ahead, Cody.
Yeah, I was just going to say that the thing is that you can't panic. Things are going to happen. Unforeseen things are going to happen. And you could be very granular in your due diligence. You could try to unturn every stone, but listen, there's going to be things that happen that you can't anticipate for. But when you're buying good real estate in a great location and you're putting in good hedges and you're underwriting, like we talked about, reserves, things like that, that can give you the confidence to weather those storms, then there's no need to panic, and so I think that's important as well. You can't be reactionary to every single thing that comes up. You have to be proactive, and you just have to be calm and patient. And like Brian was saying earlier, just be a problem solver.
So you guys were able to do that. First, you had the lift, but you had the CapEx reserves. Thank you, Cody, for figuring out to make sure that was there to be able to take in a very large exposure. The second thing was when your leasing agents disappeared and you had 20% of your leases renewing. How'd you guys solve that? Because that's, that can be complicated and solved badly, or it can be solved well.
Yeah, no, it is. And it's when you see it on paper, you're like, oh man, 50% of our properties renewing here over the next 3 months. And that's a big one. But, I think, look, it starts with a good property management team. And I think Brian was alluding to that earlier. We do third party, and we have a lot of confidence and trust in our third party property management that we work with. They manage one of our other assets. And so they've proven their ability to execute and solve problems themselves. And so we saw this as both an opportunity, not only to, kind of implement our business plan and whatnot, but, we were also looking to do a value add here. So the idea of having residents that are turning over and having vacant units come online actually afforded us an opportunity to come in and actually execute our business plan even faster.
Okay.
But what ended up happening through that is we actually ended up renewing most of those leases that were coming due. So actually ended up working out to where we didn't have to do anything. So, but I think, when we took over and Brian, we can allude on this a little bit further. You talk about like creating a resident experience, right? Like how do you, we talk about the real estate, but you really got to focus on the residents. That's who you're serving ultimately, right? And so immediately we try to say, hey, what can we do to make an immediate impact on the community to give these residents a peace of mind with a new ownership group, new management group? And we did like a community welcoming event, and we got some other things planned for starting next month to just kind of do some engagement and just show them like, hey, we appreciate you as a resident and we want this to be a community you're proud of. And showing that immediate visibility and impact, we already were getting great feedback from those residents, and And I think that what helped renew a lot of those leases. So.
And you guys, and there you go. I mean, it was thoughtful and silver lining. I get it. First, you covered the silver lining, which is with so many. I mean, it's very true in Southern California. When you get a building that actually has empty units, in some ways the building's actually more valuable because you're capable of filling those units with current market rents. And rents have gone up by 17% in the last year. So that's a huge uptick in the value of a building. If you have a unit or two, or depending upon the size of the units, you could have 2 or 3 be, you know, if it's a small unit, 3 or 4 could be significant into the cash flow, but in Texas, you can get, you know, 20 to 35 to 50 units, depending upon the size of the building, can actually be incredibly valuable because every dollar adds to the value of the building without you guys even having to rehab a building if the new rents are 17% higher than the rents that just left. Right. So, I mean, that ends up being an incredible value add by itself, managed well.
Yeah, it's always a great day when leases are renewing without having to spend any CapEx, and you can renew them at market rate. That's a good day. So,
that's a good day. Were you guys able, but you were able to renew them? How much were you able to force on rents, or was it sort of all over the board?
A little bit all over the board, just because some of those in-place leases were, when the previous management team were signing them on, they were kind of all over. But I don't know, average delta was at least probably $200, right, Brian? Somewhere around.
They're close to market rent. Obviously,
Yeah.
they had been there a little bit longer, so they got a little bit of a discount versus market, but there wasn't a lot of loss to lease on those.
That's great. Because I mean, again, the rehab for me, now I don't own large buildings. I do mom and pop buildings. The buildings I have owned in my life have been 50 units, 30 units, even like 18, 12. So I don't own the above 100 or close to 100, 150, 200s. I have not owned those by myself. The ones I have owned personally have been the mom and pops. But for me, one of the biggest drains on my building is the make readies, you know, so not being able to manage. I mean, yes, there's common space. Yes, there's water. Yes, there's management expenses. Yes, there's CapEx expenses when a porch goes bad or something like that. But the ongoing drain in the building is the CapEx expense, not CapEx, but the refurb expenses in being able to bring a unit either prepared for the next tenant, which might be as simple as paint and some new light fixtures, or it might be as complex as new tile, new countertops, new bathrooms, new tubs, right? Depending upon if I'm trying to reposition the units or not. So it sounds like you guys managed to have this work both in your favor as well as like day to day. And the reason why I'm breaking that down is because you could have freaked out. You could have said, we don't know what the heck we're going to do. But instead you took a deep breath. You said, okay, we can manage this. You got doubled down within your conversations with your leasing company, and you found the silver lining, right? Because the silver lining was, hey, if we can get a little more rent without having to spend a lot of expenses in being able to prepare a unit for a new tenant, so therefore we get that money. You couldn't say free. It's not completely free, but easily. We get that money easily. That's a value to the building.
That's exactly right.
Okay.
And I think in the multifamily space, you hear this from a lot of big operators, you really make your money on the renewals, because you can have a potential high cost of acquisition for a new tenant, right? To bring somebody to market to them, whether you're doing on Facebook, you're on Google, you're doing, you know, PPC, you're doing SEO, there's an acquisition cost that comes along with a new resident. The best type of lease you can have is a renewal, because it's somebody who already lives at their home. And if you can get them as close as you can to market rate, they're going to be much more happy, and it's going to be way more valuable for your business, just bottom line overall. So trying to get as many renewals as you can as close to that market rent is always the strategy. But obviously sometimes you have to get people that just can't afford it, you know, out of the unit. So
Sometimes. And again, there is a silver lining to that. There is more cost, more time, is time physically, more cost in goods, as a loss of rent. But like you said, it's also being able to reposition a property can be helpful. So that being said, let me share a bit off of your guys' website. So here is your guys' graphic on your investment strategy. And I think that to me, it seems like very core. Like this is kind of like if we're a well-running company that is interested in repositioning things, then this is kind of the process that you go through. But why don't we walk through what it is that you guys specifically focus on in this strategy?
Yeah, when you look at this graphic and you look at, where we started, very similar to most anybody entering multifamily, you pursue the value add opportunities. That's typically where there's more upside potential, higher yields, and more value that can be created, right? And so I would argue that most multifamily investors have to kind of cut their teeth on those value add deals, right? Yeah. But it's kind of interesting. We spent some time looking at value add. We still look at value add today, but our core thesis has actually transitioned to focus more on newer, stabilized buildings with what I would call a higher tenant profile or resident profile demographic. Okay. And the reason being is because the aggression that we've seen in the marketplace. And right, you have a high degree of execution risk right now with your value add because everything is trading on a premium. And so there's just some things that you need to be a little bit more aware of now trying to pursue the value add strategy. But just basic rudimentary fundamentals in real estate, we look for good assets that are well maintained, well operated, that does have some type of value add component, whether that be through, upgrades to amenities or the property cosmetics, or just from an operational upside. Maybe the current in place management team's not just executing as well as they should be for whatever reason. Mm-hmm. And we also look for, real estate that's in good locations, whether that be in close proximity to great schools, great employment centers, high traffic, high visibility areas, whatnot. So that's rudimentary, right? Good assets, Good location, good fundamentals. And then from there, like I said, we really try to look at how do we maximize the overall revenue? How do we capture some of this upside potential to really, increase the value and execute and achieve our business plan? So I don't know, Brian, anything I missed there?
Nope, you hit the nail on the head, Cody.
So. Makes perfect sense. So I think what's interesting to me is that if you're going to do newer properties, the physically newer properties, they're a better grade of quality. You might say A minus, B plus in that range. Then the repositioning of the property can be something that can be perceived as being harder. So what are you guys looking for in repositioning a property?
Oh, that's a great question. I think for us, Cody used the term like a light value add. So there's still a lot of A minus, call it B plus properties out there that still do have a value add component, but it's not the major rehab where you're moving walls, you're doing all new flooring, all new paint, cabinets, countertops, lighting. These are properties that are, say, maybe vintage from 2000 up, maybe, late 80s, early 90s on up. So they've got good bones, good construction, good foundation, and you're really going in there and you're doing some light upgrades. So like for some context on our latest acquisition was a 2017 build. And it's still pretty new, right? 2017.
That's right. That's what I'm saying. 2017, how do you value add that?
Yeah. So how do you value add that, right? So typically what you find in these properties that are 2010 to 2020 is a lot of them have been built by the developers and they're still being held by the developers, or maybe they've got one other buyer on top of that. And they haven't done a lot. They're still builder grade. It's kind of like the way I describe it. It's kind of like buying a single family house. When you buy it from the developer, everything's really builder grade. And some people like to go in there and do some light upgrades after they buy a brand new house because everything's builder grade, right? It's very similar in multifamily where we go in and on the property we just acquired, for example, there's no tile backsplashes in the kitchen. In an A-class property in a nice area where the homes are, almost $400,000 as a medium, you expect your kitchens to have tile backsplashes, right? So that's a value add component that we can go in and add to the property. Another example would be tech packages, right? This tenant demographic, the A-class demographic that are typically a little bit more affluent, they have white collar jobs. They like the luxury package. They like the type of convenience amenities. So those are going to be smart thermostats where you can, adjust the temperature from your phone. Those are going to be smart locks. So you don't necessarily have to always have a key. You can use your phone to get into the to your home, right? So that's another version of value add for us. And then we're also doing some other type of things like upgrading closets into what we call California closets. These are from a third-party vendor where you can go in and you can demo the closet that's in there, which is typically just a traditional, couple rods you see on the hook. These are more designer closets that have spaces for shoes, spaces, different layers of shelving. So it's a little bit more of a luxury thing. So between backsplashes, tech packages, and closets, that's our value add strategy for something that's only 5 years old. And based on where we're at in the market rent, we're still able to capture anywhere from $100 to $200, sometimes a little bit more on these rents compared to where they were at just with that light package, which all in is actually not very expensive.
Yeah. I think it's really important to really understand your micro market, your assets that you're looking at, and the demographic, and then how do you best serve the needs of that demographic. If you're looking at workforce housing community that's a 70s product that doesn't have any washer dryer connections, that's a valuable amenity, right? I mean, the residents would love to be able to do their laundry care inside their home, right? That makes sense, right? That's right. To Brian's point, you take a look at the asset that we're referring to, which is right behind my shoulder. That's a different demographic. Young working class. No families yet. They're tech driven. They like the convenience amenities, as you mentioned, and so you just got to figure out, like, hey, what is the need of the demographic, and how do we solve that problem?
Okay. And I actually really appreciate your description and going through the details of that, Brian, because you've painted in my brain a clear understanding of what it means to have a nice unit, because I'm one step away from the gang neighborhoods. My multi-units have been literally like, oh, there's the abandoned sofa 1 block down. I'm truly in like workforce housing. And so, yes, the washer and dryer hookup is very valuable to those people. I'm personally familiar with that. So when you describe but we're taking a generic product, what has been created to be effectively a generic product or constructor grade or development grade product, and now you're adding personalization that makes it feel like a luxury product. Then there's sort of like you said, the pride of moving in, the pride of a nice unit, the capacity to be able to say, it looks nice. Look at that closet. I can put my shoes away. I feel like I'm living not in a generic environment, but an environment that is built to feel luxurious. And you described that beautifully in being able to say that, because honestly, shoe racks would never have occurred to me. I'm just saying, in my workforce housing, shoe racks is not something that we would normally think about putting in. So is there anything else on this particular page before I stop sharing it that you guys want to talk to?
No, I think it just goes back to our point about just remembering that you serve people, and in your job, when you're looking at these properties, your obligation is to serve your residents. And how do you provide an affordable, accommodating home that they're proud to be in, that it suits their needs, their lifestyle, and you got to solve that problem. And yeah, that's I think that's the core of any real estate investor. So,
you want to add anything to that, Brian? You good?
No, I agree with Cody. I mean, just understanding you're a problem solver, and we're in the people business is the message here. So taking care of your investors, really, really important. Taking care of your vendors, really, really important. Taking care of your residents, really, really important. We're always thinking about the X's and O's and the dollars and the cash on cash and the IRR and occupancy and all these numbers. But really, at the end of the day, Cody said it's very rudimentary. Let's just focus on taking care of people. When you take care of your people, good things tend to happen.
You read my brain, Brian. My next question was, we talked about your tenants. We've talked about your strategies with your buildings. We know that forces value into the building, which is part of why you're doing it. How do you help take care of your investors?
Oh, that's a great question. Investor relations is something that's very important to us because we want to build long-term relationships with our investors. We don't want somebody to invest in our project once. We want them to invest in multiple projects. Maybe they don't have the capital to invest in all of our projects, but we definitely look to have repeat investors. And the best way you can do that is just having phenomenal customer service. How do you differentiate yourself from another lead sponsor? That's a question we're always asking ourselves. What can we do over at Blue Oak Capital that's a little bit different than the other sponsor? Because the reality is there's lots of great sponsors out there. There's people out there building lots of wealth and helping lots of investors. But How do we get investors to know, like, and trust us, which is something you hear a term throughout the industry.
Know, like, and trust.
Know,
Absolutely.
like, and trust, right? So it's the little things, right? It's going out of your way to, after you close a property, to give an investor a gift, for example. That's something we're really prideful of, is on all the deals that we close, we like sending our investors a little something to show them, like, look, we really appreciate you trusting us with your hard-earned capital. Here's a little something out of our pocket to show you that we really value the opportunity to partner with you, and we want to build a long-term relationship. That's just one little thing. But I think the core really comes down to being transparent and having really, really good communication, which is something that we highlighted in our mission statement that you read on our bio, because nobody likes being left in the dark. And as you just mentioned, we all know real estate is not always on the up and up. And there's a lot of challenges that we have to face that affect, our underlying business. Investors just want to know about that. If things aren't going great, and maybe you're going to miss a target one month, or maybe we're not able to issue distributions because we hit some sort of challenge in our business, just be transparent about it and own it, and be clear about what's going on. And vice versa too. If things are going really well, keep investors updated. I think that communication piece is really a fundamental part that a lot of investors don't get when they invest in a lot of sponsors. I know Cody and I talked to a lot of investors, and one of the top things we hear is that they invested in a project and they had no idea what was going on. They're not providing investor updates. They're not providing those numbers. And I think that's a really core piece of any business. But for us as real estate investors, we take care of our investors by providing them with just that top-notch customer service to make sure that they understand we value, the fiduciary responsibility of leveraging their capital. We want to do repeat business with them and have a long-term relationship.
Cody, you want to add to that? And then I have a story.
Yeah, no, I think Brian did a great job of explaining our thesis and our, our value on customer service. And look, at the end of the day, it just comes down to being authentic and transparent and, being accessible. We want our investors to feel comfortable that if they need to ask questions, or they have concerns about whatever, that we're available to address those. And like you said, just providing that customer service that gives them a peace of mind through the best times and the worst times, and I think that just comes down to authenticity and transparency. So
the transparency is huge for me as an investor. When I invest in syndications, as we talked about, and I have clients, right? Because I'm a real estate investment advisor. So I specifically work with people looking to place their assets in real estate. I help them come up with a design. And then in that design, I almost always like to try to slide in some syndicated deals, because it's the good cash flow, right? It's like there's cash flow and appreciation, and you don't have to be exhausted. I'm just saying, right? I don't have to have nearly as many sleepless nights as you guys probably have, right? So I personally like that, especially if you're like, if a lot of my people that are clients are either working or newer to real estate, or they have a portfolio that's so chaotic that they kind of had enough, right? And so syndication deals to me feels a particular slot, right? And again, unusual in that it allows you to get cash flow and appreciation. And that's part of the niche that I look for specifically. And apartment deals often let you do that, value add apartment deals. And they're similar, right? They're almost, not to be difficult, but the returns are 7, 8, 9% preferred return. And then a waterfall split on the backside after some version of fees has been paid of, maybe it's 70-30, maybe it's 25-70, 25-75, maybe it's, some are 50-50 if they're actually smaller. I find it funny that the smaller deals go 50-50, but there you go. But that's what I'm saying. Like they're like, no, there's this whole ballpark. They're in the ballpark, right? And you guys all know the ballpark, right? You guys are not confused about the ballpark of what is out there to stay competitive with your investors. So I have one of my clients, he was like, yeah, I invested in this company, and I sent them some emails and they weren't very responsive, and And oh, by the way, I ran into the guy at a conference that I went to, and he totally didn't recognize my name. He totally didn't recognize my face. And even when I said I was an investor, he was like, oh yeah, that's great. And like literally turned away from her. And she went, I don't ever want to invest in that thing again, ever, because there's too many good choices that are in this ballpark to be treated as if they don't care about me. They're holding my $100,000. Excuse me. Like I even expect my valet to treat my $100,000 car really, like really well, right? Like if I hand you a $100,000 car, I don't want you to ding it, right? So it's just, so therefore, yes. So she's not going to invest in that. We just talked about another one where she went, yeah, they don't seem to be responsive to me, and they don't seem to be da da da. And there was something that she was like, I just feel like they're not going to respect me.
Yeah, I think there's an evolution that happens, as people scale their businesses and as, you get to a certain point of expansion. Um, it's not uncommon that you may not have a direct relationship or connection with the lead sponsor, right? You may not see the guy that's on Facebook. You may not be able to talk to them, but the good companies, like the good businesses, have an infrastructure and a team in place that support all of their investor relations. So you have a relationship with somebody that's in that team, and that's the difference. And to your point, I think if you don't get that, or you don't observe that, then that might be a question mark about really, the type of business that they've been building. So I think that's a great point. But I would tell people, look, even if you're not talking to, not that we're big shots by any means, but let's say, for example, if you're not talking to Cody or Brian directly, but you have somebody that's on our team that is close to us, that we have hired to put in place because we trust them to take that responsibility for us, then that's equivocal to, good business acumen. So just a note there.
Yep. So Brian, anything you want to add?
No, nope. We're all singing the same tune. I think customer service is so important to us.
How do people get a hold of you guys? We've been chatting but we're at our time limit. So how do people get a hold of you? I mean, if they've heard that you guys can straighten stuff out, they've heard you guys are strategic planners and you're thoughtful in what you do. They've heard about how you guys try to take care of your tenants and your investors. If they want to hand you $50,000 or $100,000 to put into an investment, how do they get a hold of you guys?
Well, we appreciate the opportunity, Christina. This has been a great conversation. So it's always a pleasure to come on the show here. But we're very visible. You can find us across, social media platforms. LinkedIn, Facebook is primarily where we're at. But if you want to connect with us directly and learn more about us and the content that we're giving out, the education that we're providing to our database, you can connect with us directly through our email at Cody or Brian at blueoakinvest.com, or you could visit our website at www.blueoakinvest.com as well.
And you guys have articles and education right there on your website. So if people want to go there, you actually try to educate your investors and allow people to, check you out, but also be able to add value in increasing their education. Two most important things in investing in real estate: education and networking.
Absolutely.
All right. I so appreciate it, guys. Thank you so very, very much. Thank you for being on the show. This is Christina Suter with Real Estate Breakthrough. You can find us on YouTube, Roku TV, iHeartRadio, Spotify, iTunes, and probably some other platforms as well. Oh, and there's also the Phoebe Pasadena. So go to phoebepasadena.com. You will also find our meeting where Brian and Cody presented. Thank you, guys. Have a good night.
Thanks, Christina.